We're going to work some exercises from chapter 6, and this one is going to have several different approaches to how us do some financial statements, and then also do one that does closing and throw a little post-closing trial balance in there. And so this is not hard. It just means you have to be careful and watch what you're doing. You got to get your head around the closing and how it works, and then just pace through it one step at a time, and you're going to be fine. Okay, so the first thing we're going to do is exercise 6.1. And this one is asking us to do an income statement. It's giving us the worksheet that pertains to the income statement. So it's just giving us the columns, the right-hand two sets of columns, two sets of debit and credit columns, one for the income statement, one for the balance sheet. Wants us to pull from it to get the income statement. And so that's really a piece of cake. They've done the hard work already, and that's why this is not going to be tough at all. So we'll see how we scrolled it. The income statement columns are these two right here. So we can scroll all past these balance sheet accounts and just go to this advising fee. And so we're going to pull from this trial balance the numbers we need to complete the income statement. They've already got it headed up. We could have done this if they needed us to, but we put the company name, we put the income statement, and then we put for the month ended January 31st, 20 whatever, and we would have gotten that from the top of our worksheet. It's going to say the period of time, and it's always for a period of time because income statement. So remember, we have to have a heading right here that says revenues. So we keep looking till we find revenue. Yeah, there it is. Then we're going to need a heading at the top of the expenses that says expenses. Okay, now we go back to our trial balance to say, okay, or yeah, it is a trial balance, but it's the worksheet. Okay, advising fees is 3,100. That looks like it's the only revenue account we have. So we're going to put 3,100 right here. And we're going to pick advising fees. If they would say advising fee revenue, I would be so happy, but they just won't do it. They need to say the word revenue for me, but they won't. So I have to get used to the fact that fees means revenue. Okay. Just like the word sales is going to mean revenue also later on. Okay. So for the expenses, I'm going to put them in exactly the same order they are. Don't ask me why. They're kind of cattywampus right here where they're indented and not indented. That's totally not supposed to be like that. That just is a little quirk they have. Okay, so start with wage expense, going down through advertising, rent, all the way down to miscellaneous expense. We're going to just copy each of these down. So it's not, you just scroll back and forth if you have to, but like on a test or something, you'd have to. So you might as well get used to doing that. But what I do is just kind of grab a few of them at a time. I'm going to say wages, advertising, and rent. And I just start picking them out here. Wages, I have to say it to myself 14 times. Advertising and rent. Because I want to be in the same order they are up there, because if they're not, it might glitch on me and tell me, no, that's wrong. It might give you credit for it, but most of these programs are very particular about the order you put things in. So I want the amounts now for the wages, advertising, and rent. 700, 100, and 400. And of course, you could do it one at a time. But I'm just a little anxious to get it finished. So I tend to do it in groups, but you do whichever is best for you. But then I look back at it, see, did I get those right? Wages, advertising, rent, 700, 100, 400. Yeah, that's exactly what I put. But if I'm nervous about it all, you know what I do? Check my work. So I can see if I get my little check marks. Yes, so far so good. Okay, so I'm at rent. Let's see what's next. Supplies, phone, and electricity. So right here, supplies expense, not just supplies, right? Supplies expense, phone expense, and electricity expense. Okay, now the amounts. You could do them one at a time. I may be taking a chance by doing them this way. Supplies, phone, and rent. So that's 180, 53, and 43. 180, 53, 43. Okay, I double check them. Since I do them in groups, I have to check back and forth more. Supplies, phone, and electricity. Yes, and it's 180, 53, and 43. Yes, they look good. Okay, so now insurance, gas and oil, and depreciation. Insurance, gas and oil, and depreciation. Insurance expense. Where did you go? What? How did I do that? I touched the wrong thing. Gas and oil is the second one. And depreciation expense is the last one. Okay. Insurance, gas and oil, and depreciation. Yes. I got to make sure I didn't change something about the others while I was clicking around there. I didn't. I was using my hand instead of the mouse. Sorry. Okay, so I'm looking for the amounts on insurance, gas and oil, and depreciation. 95, 50, and 210. And I'm just pulling this straight from the trial balance worksheet that they gave me. 95, 50, and 210. So you don't go back to the transactions and try to figure out what happened again. You've already done all that. You just use the worksheet. Or if you're using an adjusted trial balance, you just use that. You don't even go back to any of the transactions or the journal entries, none of that stuff. It's already done and dealt with. So it's a methodical process of just transferring it from the trial balance over to this financial statement. All right, so the next one I'm after depreciation is miscellaneous for 24. Miscellaneous expense. Okay, I go back and double check it. Hey, looks good. So now I'm going to look at these. I want to total these expenses up. You see, I got a total already for advising fees, and it's over here in the right-hand column because they want me to total all these expenses and put that total right here as total expense. So I'm going to total up each of these. You know, I got my trusty calculator. Okay. So here we go. Let's see if I can get them in there right the first time. So I have to do it 14 times. 700 plus 100 plus 400 plus 180 plus 53 plus 43 plus 95 plus 50 plus 210 plus 24. Please be right so I don't have to do it again. 1855. I don't know if it's right or not. Remember, these are algorithmic. So I'm just like you guys. I'm adding them up, hoping I'm adding it right. If I get something wrong, I'm just going to add them again and say, what did I do? But see, since I got that cute little check my work button, let me just check and see if it's right. Yes. Okay, so now I know that's good. So I can finish my income statement by just saying, okay, the revenue is 3,100. The expenses are 1,855. So what is my net income? Well, all I have to do is subtract it. 3,100 minus 1,855, 1,245. And that is the revenue's higher. So you know it's a net profit or net income. If the expenses had been higher than the revenue, I'd have to put that net loss in there. So I think it's good. Check one more time. Yes. So look at it. You got the check marks everywhere. Good as gold. Moving on. This one's having me do the very same type thing. This is the same company, but it's reset the numbers because I'm doing algorithmic ones because I left the regular ones that are in the textbook to y'all. So major advising again, this is giving me the worksheet again, those same 4 columns. It's just different numbers because it's algorithmic, but it wants me this time to pull the balance sheet. So here's what I'm going to do. It's a piece of cake. I'm going to make it. Let's see what they give me first. They give me the worksheet. You know how to do a balance sheet. You have to do 2 schedules first. You have to do the income statement, then you have to do the owner's equity statement or the statement of owner's equity. And so what they had to do in order to give me just a worksheet, I would either have had to do those 2 statements again, or they could shortcut it by just giving me the statement of owner's equity because it already has taken into account the net income. So it's as if they've already done their income statement, pull the net income from it right here, this 1,289, and then calculated the ending capital, this 4,539. So it's as if I've already done the first 2 statements and they've given me what I need for the third. So 4,539 is what I need for my equity. So I'm going to go ahead and put that in there. And that is his capital account. Okay, the rest of it, so much straightforward. It is amazing. It is coming straight from this trial balance, the adjusted trial balance or the balance sheet columns of the worksheet. Either one, they work the same. And so I'm pulling all these asset accounts, cash, accounts receivable, supplies, prepaid insurance, and I'm going to put them in the balance sheet under current assets. Cash, accounts receivable, and of course I can't talk and think at the same time. Supplies and prepaids. I had to put it in the same order, it might glitch on me. And this is not the supplies expense. This is the supplies, the asset account, like that's probably in a closet somewhere in the supply closet. Okay, and so those balances, I'm just pulling them straight from the worksheet. 518 and 920 for cash and receivables. 518, no, 519, and 920. And then I need my supplies and my prepaid balance, 351 and 700. I'm just pulling them from there. I'm only saying it out loud so I can remember it. Okay, so let me look back and see if there's any more current assets. That's current. All those are current because they're going to be used up or turned into cash within a year. So that's all these four. And then I'm moving on. I'm looking for long-term assets after that. So let me just go summarize these current assets. 518 plus 920 plus 351 plus 700, 2489. See if it's right. Yeah, it's good so far. Okay, so now the property, plant, and equipment, which could have just said long-term assets, but this case is just the equipment. It's office equipment for 3,500 and accumulated for 200. Office equipment and accumulated depreciation. And you remember accumulated depreciation is a contra asset, so it reduces the asset balance. The equipment is 3,500 and the accumulated is 200. So you don't put it as a negative, just put it as 200 because your description says subtract it. And then you're just going to subtract it when you get over here to your subtotal. So 3,500 for the equipment minus the accumulated of 200 brings you to a net book value for the property, plant, and equipment of 3,300. So now I can do my total assets because I didn't see any more assets up there. The next account after the accumulated is a payable account, which is a liability. So I'm just going to go ahead and summarize my asset number. And so what I've got is 2489 plus 3,300. 5789. Okay, now the next one, liabilities, we're pulling this from the same schedule. Accounts payable and wages payable, 960 and 290. Accounts payable, put them in the same order they had them. So now I'm just going to total up my liabilities. 960 plus 290, 1250. Oh goodness, I'm getting close to my total. I'm starting to get nervous about whether or not it's going to equal. I'm going to add my liabilities. There's not any more liabilities, are there? Look back. Nope. After the wage payable, it's just the capital account. See how the capital account says 4,200? Can I pull that number and just take it to my balance sheet? No, that's the pre-closing capital. But after all the revenue, expense, and drawing get dumped into capital by the closing process, the capital account is going to be a different number, isn't it? So we can't use this one that's here. This is the only number we can't just pull directly. Well, we can't pull the drawing either because those numbers right there are both being used in the statement of owner's equity. So we just pull the bottom line number from the statement of owner's equity for our capital number. We ignore, that's the pieces that we ignore in the trial balance when we're doing our balance sheet. Okay, so what we're going to do, we're going to total our liabilities and our equity, 1,250, and we're going to hope it balances to the same number as the asset number, because we know liabilities and equity has to equal the same as the assets. So when I add 1,250 and 4539, I get 5,789. And I look up there at the assets, it's the same number. And so I'm like, yes. And I check my work, make sure all check marks, so I get full credit. Perfect. Okay, moving on. All right, so now they get a little longer. They don't get harder. They just get longer. So, okay, so this one wants us to do, this is giving us the worksheet. It wants us to pull the financial statements, all of them from the same thing. It just wants you to be able to discern. When you look at a worksheet, you see how it's got these two columns for debits and credits for trial balance. That's what each account started out being. Then it's got the two columns for adjustments, debit and credit. That's how much we changed it by when we got ready to do our financial statements. And then these two adjusted trial balance numbers, that's the numbers that are actually the final balances for each account. And so you could do, let me move this over. You could do the financial statement straight from this adjusted trial balance column because it doesn't change again. It just moves them over here to put the ones that belong on the income statement in these two columns for income statement and the ones that belong in the balance sheet on these two columns. But really, these are the final numbers that are going on the financial statements right here. So if you just had an adjusted trial balance, you could do the financial statements. But what they're doing is trying to make it easier for you by putting it in a worksheet so that you can see, and you probably won't trip as much, that these income statement ones that start down here with repair fees are going to show up on the income statement. And all these that start at the top, cash, all the way through the capital account are the ones that'll show up on the balance sheet. So we're just going to click through it just like we did a minute ago. And we're going to start with the income statement because you have to have that one to roll into the next one. So we start with this one, repair fees. And I'm just going to use these next to the last columns that say income statement. So I'm using repair fees at $5,200. I need a heading that says revenue. I need a heading that says expenses for the top of the expense column. So I'm good. Now, all these expenses, one at a time. Wage expense, well, one at a time or three at a time if you want to. Wage expense, I'll do it one at a time. So wage expense, and see, I'm ignoring all these numbers that they started out being. I'm only pulling the ones in the adjusted trial balance or in the income statement because they're the same numbers. So for wage, I'm ignoring all this over here. I'm just going to pick up the wage expense from right here, $25.40. So here we go. Wage expense, $25.40. All right. And then advertising expense, $200. And next, rent expense, $650. So don't get confused to start grabbing numbers from all over the place, only from the income statement columns or from the adjusted trial balance columns. They say the exact same thing. Supplies expense is $310. And then phone expense is $55. Insurance expense, $240. Gas and oil, $210. These are all expenses. I'm just saying the first parts of them. And depreciation, $50. And last one, miscellaneous, $41. Okay, that's the expenses. So now I have to add all those up to get me a total expense. Okay, first time. Come on, we can do it. $25.40 plus 200 plus 650 plus 310 plus 55 plus 240 plus 210 plus 50 plus 41. Okay, I hope it's right. 42.46. Again, this is algorithmic, so I really don't have the answer key written anywhere. Let's do the check my work, see if it's right. You see that happen sometimes. I just keyed something in wrong. Okay, here we go. One more time. 25.40 plus 200. If you get the little red X, you go, but it just means you dropped a digit somewhere. Just try again. And I'm at 55 plus 240 plus 210 plus 50 plus 41. This time, 4296. Yeah. Try again. Yes. Okay. So now I've got my revenue. I've got my expense. I'm going to see what is my net income or loss. 5,200 minus 4296. That's just this number, 5,200 minus 4296. 904. And that's my net income. It's the revenue's higher, so it's not a loss. It's an income. So that part is done. I can do check my work again, but I feel pretty good about it. Class 4. Yeah, it's right. Okay. So then I take that 904 and I'm going to go down to the owner's equity statement with it. Let's see here. We're going to get this in. Did he start out with some equity? Let's look. Yes. See how he has capital? This is not the first year operations. He has capital on his balance sheet. He had beginning capital of 7551 right here. Okay, that's what I'm going to use for my beginning capital right here. 7551. And that's going to be his capital beginning. Okay, so you pull the beginning one is what comes from the trial balance. And the ending one is going to be from your calculations. Okay, so the first thing we did was that, and then we didn't have a new contribution of capital. That's just the total. And then we go, so we're just going to add net income. And we've got it right there. You see it, 904. That's what we're going to pull right here. 904. And then we're going to subtract out any drawings. Got to go back to our statement for that. All right, so look right here. Look like the drawings was $1,000, doesn't it? Okay. That's what I'm going to pull. Uh-oh, he pulled out more than he made that month, didn't he? So I'm going to take the profit of 904 and subtract $1,000 from it. That means he decreases equity by $96. So I'm actually put a negative here, 96. And I'm going to say that is a decrease in capital. That's going to leave me with his ending capital on January 31st, which is 7551 minus 96. Now there's a chance that they're going to give me a glitch for putting that negative there, because some of the programs don't want you to put the negative because the word decrease is already over there. But I think this one wants me to. So I'm just going to try it. If I get a glitch when I do my check my work for that 96, it's probably because it doesn't want the negatives, or it wants brackets instead of negatives. But anyway, we're going to give it a shot. So I think that's my equity, 7455. I want to check my work, see. Yes, all those pretty little green checks. It's wonderful. So now I'm going to take that ending capital from that, and I'm going to drop it in my balance sheet. What was it again? 7455. Okay, now all I'm going to do is for the rest of the balance sheet is go back up here to this worksheet and pull the assets from the top of the page. The current ones were cash, accounts receivable, supplies, and prepaid. Cash, 3735. I have to do a lot of scrolling. 37. You see how I'm having to do one at a time, because really it's just too hard to keep up with. When you got the whole spreadsheet in front of you, it's really hard to keep up with more than one line at a time, because you could get off, and it's hard to find it if you're dealing with multiples at a time. So the second one was accounts receivable, and the ending balance for it was 1460. 1460 accounts receivable. All right, and the third one is supplies. That's funny. They have an error in their algorithmic one. Yours won't have that because it's not algorithmic. But look how mine is. It showed a negative $10 as the ending balance of supplies. It's not even possible. But I bet it won't balance if I don't do it. I'm going to put in what they have, even though it's not possible. Okay. Prepaid insurance is $650. That's another problem that happens sometimes with algorithmic generations, is that they have things that aren't logical. Okay, so the current assets total, I'm going to add these together. 3735 plus 1460 plus 540 minus 10, 5725. Let's see what they do when I ask them if it's right. Let's see if it is right. 4735. 5195, 5185, 5685, 5725. Yeah, it should be right. Let's see. Doesn't like that. Did I get the 540 wrong? Maybe I pulled the wrong one for it. Ah, yeah. Where did I get 540? Oh, they just keyed it in wrong. See the prepaid insurance? What's the balance? 650. See how it's giving me the red? It's telling me go fix it so you don't get this, lose these points. Shame. Okay, so try again. 3735 plus 1460 plus 650 minus 10, 2100. No, I can't be right. 37, I dropped a digit. 3735 plus 1460 plus 650 minus 10, 5835. You do it in your head, probably easier, because this is really not working out so great for me because I keyed in my calculator the wrong number. Okay, all right. Property, plant, equipment. So that would be your delivery equipment for $32.50, and your accumulated is $50. $32.50 for delivery equipment. And a $50 accumulated depreciation. So your net book value is $3,200 for your property, plant, equipment. So now I can just add my long-term assets and my short-term assets, or my current assets together, and I'm going to get $58.35 plus $3,200, $9,035. Okay, so now I got total assets. Now all I need to do is pull my liabilities. Let's look at it. Wages payable. First accounts payable, then wages payable. Accounts payable is $1,180. All right, and then wages payable, $400. Okay, now we're getting closer. I'm hoping it's going to work. 1180 plus 400. So you can do with your eyeball, 1580. So if you take 1580, which is your liability total, don't have any long-term liabilities this time, and I add the capital of 7455, I come up with a total of 9,035. And I look up there at the assets to see what that number was. It's the same number. Yes. So I check my work just to make sure I didn't do something crazy. It looks great. So that one's cool. It's totally right. And so then I just have the last one to do. And this one is asking us just to do the closing entries and the post-closing trial balance. So this one, really simple. It's easy to get it wrong if you don't know about closing. So remember, closing is where we're trying to zero out each account that's temporary so that we can start a new period. So this is what we're about to do. First, I'm just going to start the closing by looking at what's in the temporary accounts. The temporary accounts are the income statement accounts and drawing. So you see, I can just ignore the ones at the top because those aren't going anywhere. They're permanent accounts. So I'm going to be closing drawing and everything below it. So the ending balances are these numbers right here. Drawing has a $1,000 balance, and then repair fees has $5,200 plus all the expenses have a balance, a number. So first we do them in the same order every time. We close the revenue. So this is a repair fees revenue, $5,200. So it has a credit balance. When I close it, I have to debit repair fees. Oh, maybe. Is it making me do adjusting entries too? Well, I'm looking. Oh, it wants me to journalize these adjusting entries that are posted here. Okay, so we'll do them in the order that they present them based on the asset. So look at the first one. See the adjusting entry supplies, that $300 that's in the adjusting column. So I'm gonna credit supplies. We're not closing yet. We're going to make these adjustments first. We're going to put $300 to supplies as a credit. And it's got a partner account of supplies expense, which we're going to put as a debit. Okay, look and see if that's what they did with the 300. Yeah, supplies expense took a 300. All right, the next entry is going to be prepaid insurance with a credit of 240. The partner account for prepaid insurance is insurance expense. I'm going to look up there and make sure that it did come up to that. Make sure there was an entry made to insurance expense for 240. Yes. All right. And then the next thing that got done was accumulated depreciation took a credit of $50. The partner account to accumulated depreciation. Oh, let's see where we're going. Did I get it? Let's see if it's got it. It did not do that one next. Let's see which order they did it in. Oh, they did the wages as the third one.